right? Identify, predict, decide, execute, right? They go through the process, identify, predict, decide, execute. They identify a trend, but then they're kind of stuck in this single way of thinking, because how long does a trend actually last? If you're doing analysis on a day, are you going to get a trend every day, every week, every month? No, a lot of those things are going to last forever. So there are going to be these amazingly long periods between opportunities. I remember working with Naomi, and Naomi said, I went 2 years without a trade once because the euro dollar was in consolidation. So I don't really like to think of, I mean, I don't really like to think of trend trading as being kind of with the trend. I like to think of it as more of an approach. So like pullback trading for me is in a way trend trading versus like reversal trading in a sense. So I told him something he may want to do is instead of kind of declaring that he has to be a with trend trader, is maybe call himself more of a price action trader, just a structure-based trader where he has the ability to go long, go short, and it could be based off either long-term predictions or short-term predictions based on his overall analysis, right? So he can look for directional opportunities that are technically against the trend, but maybe in line with the short-term trend. He can look for reversal opportunities that are short-term against the overall trend, but longer-term with the overall trend. And the more experience I get in trading, the more, I think that's the best way to do it is just to forget about these terms of trend and whatnot. So you're going to see that as kind of an example here on the Euro Aussie, because we're looking at this market, right? And in general, we've been a lot of consolidation, right? The last move was technically a downward move, right? But we're not in any type of bearish trend. Would you guys agree? Just knowing our principles on new structure high, new structure lows, all that fun stuff. We're not in any type of bearish trend here. So if you're defining yourself as a trend trader, there's nothing you can do because you never get past that I part. But there are certainly smaller moves that we can take advantage of. And we can see a potential smaller move right here. So the most recent move here was a move up, right? We came back down to test previous structure right here and got a hold, right? We go down to the 4 hour. This is going to give us a little bit of a clearer picture of how we came down. You can see we consolidated, we based off, we based off, we based off. We did get a little bit of a break here, break and close below on the lower time frame. And then we immediately came right back above this higher level of structure. And you'll see this more clearly once we get down to a lower time frame. So on the hourly here, right, this is where we can really see things clear. We can really see the retest of structure, the hold, the structure high right here, the retracement. We know this is a beautiful candlestick situation right here. Would you guys, this 3-bar reversal? Apologies for you guys watching on, YouTube or Facebook. We had some difficulties this morning with the stream, so you're a little bit late, but this is the trade of the day. Right? You guys see this beautiful 3-bar reversal right here? Yep. So if I'm a trader that's looking to be a quote unquote trend trader, we are a type of trend trader, not overall direct trend, right? What can I look for in this situation? What would Ryan be looking for if he's saying, hey, what's the next opportunity for me to trade? And I actually want you to answer, Ryan, because we're again, you've been in here. We've put you to the test. I've tasked you with listening and watching and observing. Let me know what you would look for here. What would need to happen to offer you a trading situation here? It's a good practice. It's the end of the year. My trading's over for the year. So I told Ryan we'll have a lot of time to kind of walk through stuff and answer questions. I would predict a move higher. Okay. So we predict a move higher. Okay. So would you be interested in getting, this is going to depend on what type of trader you are, obviously. Would you be interested in getting long right now at market while price is against the newly formed ceiling? No. Matt says no. Okay. So what would need to happen? Wait for a breakout. Okay. So let's use that if then syntax we always talk about. So we can identify our most recent high right here. Agree? If I'm sitting back, if I'm in Ryan's seat, I'm sitting back and I'm eyeballing potential trading opportunity. The first thing I'm saying is, okay, what I want to, and I always lose these markers are at. I want to see a fresh break, a higher high, higher close, right? Because if I see a fresh, what does that signal for us? What does a fresh break signal? Matt says I would wait for a higher high and then a pullback previous structure. So we can identify a new structure high, right? If we can identify a new structure high, that lines right up with our prediction, right? Now I can predict a move higher. So there's three parts of that prediction process, right? The IPD, or identify, predict, decide, execute. We got people on TradingView saying the same thing. I would look for a move up the previous high. Someone says buy now, it will moon. You're too late. I wouldn't buy now. Yep. One of the biggest problems with retail traders, we talk about why we get kind of suckered in, not all of us, but a lot of us get suckered into the stuff, is we're typically late to the move. Or we're too early to move. We don't look for confirmation. So we identified a higher high, higher close. We can now make prices likely to go higher. So now the next step is Ryan's got to make this prediction. Okay, Ryan, if we're likely to go higher, I'm going to task you again with a prediction, or Matt's playing along too. Where are we likely to go higher to? Because we have to make sure there's enough meat on the bone, as I'll say, for a trade, right? You've seen so many trades here in the live room where there are good opportunities and it's like, not enough profit. Or like, Akil, why did you just skip through the chart real quick? There's only like 10 pips of profit, not enough room. I know the risk won't work, right? So we got to make sure there's enough room. So Chris says 160s. It's like we looked at this before, Chris, right? 160s, eyeballing this previous level of consolidation over here. Oops, sorry about that. I'm drawing lines here. I'm running a little slow because I got like 80 streaming things lined up. So apologize for the lagging, but on this previous structure right here. Yep. Anything else we can use to maybe kind of dial in on that level? I love making you guys do the work for me. This is pure entrepreneurship, right? Why do the work myself when you guys can do it for me? Fib extension. We don't use a fib extension yet, but a fib retracement. Yep. Fib extension is going to be a little bit hard. I like, once we get that fresh break, yes, a fib extension. But a fib retracement from our swing high here to our swing low. What's the retracement of this most recent leg? Do we have anything sitting in there? Oh, look at that. You guys see anything? Yep, we got a 618, the golden mean. So a pretty decent spot. And then obviously you want to tweak it to your personal liking in that spot. Some traders are like, hey, I like it right at the 618. You guys know me, right? I like to be at the bottom. Whoops, sorry. Delete that. I like to be at the bottom of a consolidation zone because I'm a scared little trading punk, right? But wherever you want to kind of dial in that zone, yep, psychological level, wherever you want to dial in at that zone, whether it's $1.60 even psychological level, like Brian said, or if it's a little bit below structure, right? You dial on that level. So you've identified the higher high, higher close, right? We're working in the future. You've predicted a move higher. You've done a good job of predicting a successful afraid trading point. Yeah, I've had a good career being we're not going to call it scared. We're going to call it conservative. I've learned, trust me, I wasn't like that at first. I learned my lesson plenty of times for having stops or targets at the top of like these type of zones, and then price action doing everything that I thought it was going to do, and then reverse a few pips before me. I can't tell you how much that hurts. Again, you know me, I don't really mind losing, right? Losses they don't really bother me. The biggest thing that bothers me in trading is when I'm right in a prediction, but I don't capitalize off of it. That is the thing that still to this day gets me emotional. You guys been in here for I don't know how many years with me in the live. I lose all the time. You see it all the time, right? I had that trade of the day last week, or yeah, on what was it? Aussie Canada, and I'm like, I'm going for the trade. Aussie Canada. I think news is gonna be a line. Splat, right? The brain debris splat blew up right in my face, right? Did that bother me? Nah, chilling. That's cool. I don't get upset. I lose enough. Again, historically, I'm like a 55% trader. So I'm used to losing on a regular basis. What sticks with me is two things. One, missing opportunities, right? Missing opportunities, self-sabotage, stuff like that. I don't do that too much. But being right in a prediction, but not capitalizing off of it. And I used to do that a lot, where I would be right in where I would predict the market to go, but I would be off in the specifics of my my target taking. And why do you think, just to bring up another lesson in the middle of this, because this is what we always do, rant-a-clause, right? Giving you guys these presents, these gifts of rants on a daily basis. Why do you think I was missing targets? A very common trader question. Why do you think I was missing targets? Hesitation? Nope, not hesitation. Hesitation would be missing entries. Why missing targets, guys? Shooting for highs, but we have what's shooting for highs? Risk reward, not risk reward. Nope. It's one of our emotional triggers. Give you a big clue. One of our emotional triggers. Greed. Yep. Greed. I was busy watching TV. I wasn't missing trades. Looking at too many other things. That would be those would be if we had to categorize, right? We have categories of most common trading mistakes and the reasons for them. Watching TV or looking at too many other things, that would be missing a trade. Yep, greed. Greed would be the biggest thing. I wanted all of the move, right? I wanted all of the move. All of it. And I'd end up catching none of it. So, and also at the time, I didn't really adjust, right? We had the Q&A yesterday. We had a really good conversation about making adjustments and tweaks and stuff like that. I didn't I didn't make any adjustments because at the time I was a very stubborn trader, right? If you guys aren't familiar with my story, I went from someone who was extremely reckless to the exact opposite of the spectrum. I was extremely reckless and wild and doing whatever I want whenever I wanted it. And I shifted to being super disciplined because I needed it, right? I had zero discipline, so I went to all discipline. So I was that, my mentor was ex-military, so he was, you can imagine my training. It was strict, like don't change anything. And then eventually I broke out of that, and you start doing like reviews, and you start noticing errors and tweaks and stuff like that, and then you form into the trader that you eventually become. But yeah, I learned a lot of brutal lessons by doing that. So let's continue this. All right. So we did the first part of our prediction, right? Or we did the second part. We predicted that if we get that higher close, price is likely to continue higher. Boom. We asked ourselves the question: if price is likely to continue higher, where we likely to continue higher to? Boom. We analyzed the level, $1.60. Next question: Chris already answered this, or Matt already answered this. How are we likely to get there? And this is going to be more specific to your, you can make the prediction of the different ways how, but you can kind of combine how we're likely to get there and what you can actually use, right? Because there's two ways we can get there, right? We can go straight there, or we can put in a little bit of relief and then get there. Straight there would be just a straight breakout, right? We break above these highs and we just continue up. So if you're a breakout trader, guess what? This is something you can work with. If you're a pullback trader, is there anything you can do? Calvin, real quick on TradingView says greed at your level of experience. Yeah, well, this was a while ago, Calvin. So this wasn't me. I don't know if you guys were in for the beginning. I said I just celebrated my trading year ended Friday. I just celebrated my 15th year of trading. So when I'm talking about greed and whatnot, this wasn't last year. No, I've been greedy in a while. I would say my last greedy year, when I was my last year of wild, reckless behavior, would have been in 2008, 9, 2009. 2009, maybe 2000, maybe 9 going into 10. There's still little bits of recklessness there. But yeah, 2009, 10, I would say. Let's call it 2010. That's probably the last. That's after 2010 is when I stopped most of my reckless behavior. Jagger says, do you take December out of your back testing? No. I test the entire year. Yeah, so I haven't been reckless in a while. I still make trading mistakes, very rarely, and they're usually mistakes like I do these live sessions every day, so it's usually like I'm rushing through something. I don't make a lot swing trading. When I was day trading, I stopped day trading last year. When I was day trading, I would miss a lot of trades, mainly because we'd be analyzing something else, or I'd be answering a question, and I just miss a lot of trades. I don't miss much swing trading because I have so much more time to do it. But I used to make not a lot of mistakes, but a handful of mistakes day trading, just because of lack of attention. I just wasn't paying attention. It wasn't Netflix or TV, but I'm trying to educate these traders I work with. These guys. So anyway, if you're a breakout trader, you can look for the breakout. Obviously, there's different ways you can do that. Matt mentioned earlier, pullback, right? So the same exact thing that we saw here, right? Same exact thing where we came here, same exact thing where we came here. Just wait for that fresh break, wait for that pullback, and then look for a continuation up. Now, going back to our circling around before we end this thing with our original point. So Ryan, this is a trend continuation type of trade. Would you agree? And yeah, you can drop down to the lower time frame as well if you want to, the fast lane if you want to look for a reason for entry. This is a trend continuation trade, right? But the type, right? So this is what I mean by you can be a trend trader without technically defining the underlying trend. Because again, if we go back at higher time frames, we never identified that we were in a bull, did we? So this would be something where if you were living under that definition, you wouldn't be able to approach this. So, and this is what I mean, where you can, I would love to, if I weren't teaching, I would do it. I would love to eliminate the words trend or counter trend. This is price action trading off of a directional prediction, right? Because all we're doing is we're using our ability to read a price chart, understand a price chart, and we're making a directional prediction off of that. And we're looking for that directional prediction to play out. Now, I mean, there's no value in understanding the underlying trend. There's tons of value there, right? If this were aligned with the underlying trend, we can do all types of fun stuff with extended targets and whatnot. We know if it's counter trend, we want to be a little bit more conservative with targets, right? So it helps with our target selection, knowing the underlying trend. But you can be a price action trader without saying to yourself, if I don't identify the blah, blah, blah trend on a higher time frame, then I can't take any opportunities. So you can find that middle ground. So that's it. Trade idea for today. How's that euro dollar doing? Is it still pushing down? There we go. Good garlic. Trading with you guys, YouTube guys, Facebook guys. Thank you guys for joining. We'll be here tomorrow, same time, same place, 7:30 for you to join me for my first trading opportunity of the day. Live room members, where would you guys like to head to next? What's on your radar for today?